Happy Friday, ladies and gentlemen, and welcome back. I am your friendly neighborhood PM, here to give you your top 3 market points of the week. Now, once again, just like last week, we have a lot of headlines to digest. So, without further ado, let's get right into the top 3 and on to your weekend. At point number 3, we're going to start a little bit more upbeat. It was Broadcom, ticker AVGO, reporting their earnings just last night. So, Broadcom did have a solid beat on both EPS and revenue, and also gave a pretty solid upbeat forecast going out into the future. Now, what that goes to show is that the AI spending trend is still going strong. And on top of that, CEO Hock Tan of Broadcom did come out and say that their hyperscaler partners are aggressively investing in their chips for AI. And we're talking partners like Apple and Google. So the spending trend continues to go on in the AI space, and Broadcom continues to show that here today. At number 2, we're going to go a little bit more into the labor market like we talked last week. It is non-farm payrolls. Now, the non-farm payrolls number did come in a little bit lower than expectations, but still pretty solid, up 151,000 jobs in the prior month, better than the prior reading. Now, unemployment did tick up to 4.1%, so there is a bit of a mix there as to what's going on. But this does continue to show that while the economy may be slowing a little bit, the Fed is potentially able to stay on the sidelines a little bit longer and allow them to assess what's going on with this evolving trade policy dynamic we're seeing right now in Washington. And then finally, number 1, you all might have guessed it, and I alluded to it in this last point, but it's tariff talks, it's tariff talks, it's tariff talks. So what we saw earlier this week was, well, we were expecting tariffs to be implemented on March 3rd for Mexico and Canada, as well as on China. Mexico and Canada, we were going to be seeing 25% tariffs across the board. Now, what ended up happening is the day did come, but then not even a day later, that was then peeled back by President Trump, now saying that, well, we're going to pause those tariffs for any good that is USMCA compliant, and we're going to pause them for another month or so, essentially creating a reprieve. Now, we have heard comments from Canada as well as Mexico that their retaliatory tariffs they levied against the United States in response to President Trump's tariffs were going to stay in place until a resolution was worked out, even in the interim. However, all this does is continue to create uncertainty and confusion along the markets, and as we can see how they've done this week, down over 3%. The markets do not like uncertainty, so these trade dynamics are going to have to continue to work themselves out and get clarity whether or not it is fully going forth with tariffs or peeling them back. Once the market gets some clarity, we'll start to see some stabilization in the markets. Now, that does it for your top 3 points. What are we looking to for next week? Well, next week, we are pivoting back to macroeconomic data and specifically pricing data and CPI. We're going to start seeing if these prices have continued to flow into your everyday goods. We are continuing to see maybe eggs are starting to go up in prices. Now, this number is going to once again help facilitate what we're going to see the Fed do at their next ratings decision meeting, as well as if this is going to impact any of the trade policy that we've been talking about over the last couple of weeks. So that's going to be deeply on our radar next week, and we're going to keep you informed here on the video. But as always, if you have additional questions, please reach out to your financial advisor. And if you don't have one, follow the link below and we'll get you connected with one, or dig into the written weekend review. But as always, have a great weekend, and we will see you the same time next week. Thanks again.